Today's video, in response to a number of viewers on the channel, I thought I would talk about Apple and its recent 6.6% decrease in the price of the stock, as you can see here up on screen. November 2nd, falling $14.74, 6.6% during regular hours trading. Another 0.98, 0.47% in after hours trading, so 7% down. Take a look at the 1 week graph. You can really see that big trend down here from the first till the second here. The past 5 years of trading, a remarkable 199.84%. But let's go back to the 1 week graph here. Again, down 5.82%. And if we figure the after hours trading here, over 7% in the red. So what happened with Apple? So Apple had an earnings report on the first. If we take a look on the bottom here, you can see that it actually beat forecasted earnings per share expectations. You can see the expected earnings per share, $2.78. Actual was $2.91. So it had very good numbers, very good growth since last quarter. Revenue was up 20%. Their earnings per share up 41%. The service revenue of over $10 billion, which was an all-time high for Apple. So what happened? Well, unfortunately, there was some uncertainty with regards to forward-looking prospects. Essentially, with an earnings report, not only are there numbers with regards to earnings per share, but there's a lot of statements regarding forward-looking statements with regards to a company's estimated revenue, gross margin, operating expenses, other types of income, how the company will be taxed moving forward, and plans overall in the company. Apparently, one of the things that Apple will be doing moving forward is eliminating its unit sales figures for the iPhone and other hardware products. Investors did not like that statement, with a number of other statements as well in there. But uncertainty in the stock market is something that will drastically drive the price of a stock up or down. Typically, a lot of these expectations should already be placed in the price of a stock. It should already be priced in when there are big uncertainties or there's big surprises that could really move the price of a stock. So even though Apple beat its earnings prospects, it's had record revenue over the last quarter, it still dropped by quite a large margin because of that uncertainty with regards to the sales figures and a few other developments within the company. So you can't always expect that if a company does beat earnings, that the price of the stock will rise accordingly. Again, Apple here, perfect example of that. I've done a few videos in the past regarding similar types of revenue beats and the company trending down double digits. Apple here down 7%, beating revenue here. But unfortunately, some of the other uncertainties with the earnings call, investors did not like that. And a lot of investors started selling off, causing that big decrease in the price of the stock. Please take a look at some of my prior videos. I went through trying to trade around earnings reports. Very, very risky because, like I said, it really doesn't depend on if a company beats its revenue per share. It really depends on the overall uncertainty within a particular conference call. If investors are reassured, typically the price of the stock will remain stable or increase. If there's a lot of uncertainty or there's a lot of surprise that has not been priced into the price of a stock, the stock will drop quite dramatically, which presents another opportunity of a shorter term swing trade jumping into, for example, Apple here after that large 7% drop here, expecting that it will rise on the next day of trading on Monday, and then you'll sell off for maybe a percent, maybe a couple percent swing trade, a positive trade jumping in and out of the stock. I've done that in the past, but again, very, very risky because it's very hard to kind of determine what investors on Monday will do. There may be a continued sell-off or there may be a little bit of a rebound. I've done this in the past. I've had mixed results. Definitely, I would only do this in stocks that you are more than happy to hold for the longer term. I do that with all of my swing trades. If you aren't comfortable holding a stock for the longer term, if you jump into a stock and it starts trending down, I definitely would not do that particular trade. So again, if you guys enjoy the content, feel free to like, share, and subscribe. And until the next video, we'll see you then.